We have a lot to go over, ladies and gentlemen alike. My name is Tyler. Welcome back to the channel. Drop that like on the video, subscribe to the channel, and turn on that notification bell. We have to go over the fact that AMC has a partnership that nobody has been talking about that is very important. Not necessarily for the short squeeze, but it helps to boost the overall value of the company. So the potential downside here on AMC just got a little bit smaller. We're also going to go over a little bit of a technical analysis. We're going to go over the key things that are happening September 1st, September 3rd. We just have to talk about overall what this will do for AMC stock. So we have much more to cover in this video. I don't want to waste any time getting into it. Like I said, drop that like on the video, comment down below. Let me know what you think is going to happen this upcoming week. Subscribe to the channel, all of that good stuff. Now, let's get right into it, guys. We are currently at $41 flat. We did see a green Friday, so we are likely to see a green Monday, and it's probably going to be in the range of about 5 to 7% in my opinion. There's a lot of overall bullishness around AMC stock, so I don't think that is going away. I think it's likely to continue on Monday. So definitely looking very bullish, a very bullish start to the week. Now, watch for the volume to come back into the stock because Friday we did have a lower volume day of 72 million for volume after we did see 109 million the day before that and then over 200 million each day before that. So definitely watch for the volume to go back into the stock, which I do think it will, but I don't expect a crazy big volume day. In between about 80 and 100 million for volume, going up about 5%. That would be my estimates for AMC tomorrow. So nevertheless, going to be a great day in my opinion. Now, let's briefly get into the Ortex data before we break down all of the key information you guys need to know. So we are at 17.17% short interest percentage of free float, which is extremely high, almost categorized as extremely high short interest. Extremely high short interest being categorized at 20% or higher. If we do get up to those 20% numbers, you're going to see a lot of people talking about the AMC short squeeze yet again on financial media because AMC tends to be the one that is left out. Even though 17.17% short interest is something that should be talked about, they're not going to talk about it unless the levels get to extremely ridiculous highs. Now, we do have 87.84 million shares that are currently sold short, which is a very high amount. Nevertheless, on Friday, we only had 72 million for volume. We have 87 million shares that are sold short. Imagine if every single buy going into the stock on Friday was volume from shorts actually covering. We would still have about 10 million shares that would need to be covered. The price of AMC stock would have went crazy. So if that puts it into any perspective for you guys, these are very, very high numbers in and of themselves. Now, the share utilization is at 92.95%, which we have seen a big jump. So you're either seeing more than likely, you're seeing less shares actually being available to be sold short. Some of these hedge funds and institutions who do have long positions that were willing to lend out these shares to sell short have retracted on this, or they have actually went out on loan. But we're not seeing that reflected in the free flow on loan. So I think you're seeing a lot of hedge funds and institutions with long positions actually recalling some of those shares and not wanting to lend them out. So definitely looking good right there. Once we get up to about 98 to 100% of the share utilization, meaning all of the shares available are pretty much lent out. There's a scarcity of shares. That's where you're looking for the forced share recall situation to come into effect. Like I said, free float on loan, 20.74%. That is realistically how high the short interest could go if all of the shares out on loan were actually sold short. So we still have about almost 5% of the total float that is out on loan, but that has not been sold short yet. So I do expect the short interest to continue to go up, which is definitely a good thing overall. Now, the stock O tracker data, I'm trying to rush through this because this is kind of the back burner information. You guys might already know this, you might not. We need to get into the information that I know you guys are unfamiliar of. So on Friday, obviously, we did see 67,000 calls that did expire in the money. A lot of those at the $40 strike. So you're going to see a lot of support just like we did see over here back at the charts where we did bounce off of $40. Now, like I said, at $41. So you're going to see a level of stability around $40, I would imagine. Now, for the next 2 weeks, you're not seeing anything crazy. 24,000 calls that are currently in the money for September 3rd, expiring this Friday. 75,000, which are out the money. You can see a boost in buying power if you do see, let's say AMC goes over 45 and then to 50. You do see a bit of open interest at those two strikes, but you're not overall going to see a huge gamma squeeze activity. Now, on September 17th, that's really where you're looking at some action that is going to go back into the stock. It's going to be very volatile, as we do have over 330,000 puts that are out of the money, 34,622 that are in the money, for calls, 114,403 that are in the money, and out of the money, 245,000. So you're definitely going to be looking at a volatile week on this monthly options expiration date on September 17th. So that's really your next chance of seeing a gamma squeeze. So now let's get into this information that you guys don't know about, because I was unaware of this. I did see something on this on Reddit a couple days ago. I didn't think too much of it. Nobody was really talking about it, but Short the Fix actually did come out with this in a video today, so definitely check that out if you guys do want to. All credit does go to him. I am basically passing on this information. So, Whips Media platform powering AMC theaters on demand. Whips Media advanced online video infrastructure, helping AMC's digital movie platform deliver a robust at-home viewing experience. And it does go on to say, Whip Media, the leading enterprise software platform and data provider to the world's largest entertainment organizations, announced today that AMC Theaters, the largest theatrical exhibitor in the United States, in Europe, and the Middle East, and in the world, is using Whips Media's industry-leading solution for its video-on-demand business, AMC On Demand. And then if you guys are unfamiliar, AMC Theaters On Demand offers more than 5,000 movies from every major studio and independent film distributors, available for purchase or rent. The implementation of Whip Media's platform is beneficial in the execution of an online video infrastructure, allowing AMC Theaters to offer its millions of AMCStock members a rich in-home video experience to complement movie going. Now, if you guys are unfamiliar, just like I was, of what Whip Media actually does and who they actually power their solutions for, you see all the big name players on here: NBC's Universal, Paramount, Sony Pictures, Lionsgate, Viacom, CBS, BBC Studios, PBS Distribution. You see AT&T, Spectrum, Pluto TV, AMC now, HBO, Discovery, T-Mobile, Showtime, Vice, Smithsonian Channel, and they are all powered by Whip Media. So to have AMC join this, you guys see that right here, that is a beautiful logo. To see them join all of these big time producers of films with pretty much all their own streaming platforms is definitely a huge thing. Now, this actually did come out August 25th, so not too many people have been talking about this, which is very surprising because this is actually pretty big news, but not necessarily for the short squeeze. Like I did say in the beginning of the video, this just gave AMC a little bit higher of a multiple, especially if this is very beneficial for AMC as a business. If you see the numbers of AMC On Demand start to pick up, you see more people starting to use their service, which they already do have millions of people that use the service, and you can actually support AMC by going to AMC On Demand, renting their movies, buying their movies, whatever you want to do. If there's not an AMC theater around you, just like there is not one around me, I'm definitely going to be using this. I've used this a couple times, but nothing too crazy. So I'm definitely going to be using this. You guys can, if you want to support the business overall. But like I said, it just gives AMC a higher multiple. A stock like AMC, without all of this extra stuff they've been doing, just a theater business compared to Netflix. Netflix is going to have a much higher price to sales or earnings ratio. They're going to be valued much higher for every dollar that they do earn rather than AMC, because there's more growth in that business segment. So obviously this is a great thing for AMC. I think it just pushed the needle up a little bit higher, so the potential downside is going to be a little bit less, and it basically makes the short thesis. Why would you short the stock? Why would you short the stock if they're doing all this to innovate the business, grow revenue, create more stable revenue sources? So I think the short thesis on AMC stock is just deteriorating every time good new information does come out. So that is basically all you guys need to know from that. We didn't get any more specifications to this. Overall, looks to be a great partnership that nobody is talking about for whatever reason. Now, let's talk about the whole margin call situation, and we're just going to go over this briefly. I'm sure you guys already do know about this, but September 1st, 2021, that will be, let me check exactly, September 1st. I'm really bad with dates, but that is Wednesday, September 1st. During his opening remarks, DTCC's Bob Stewart, Executive Director Director, Product Management for Institutional Trade Processing, discussed the impact of Phase 5 on uncleared margin rules (UMR) for over-the-counter OTC derivatives, which kicks in on September 1st, 2021. In quotes, there will be an upsurge in the volume of margin calls and an increase in the need for third-party custodians to keep safe collateral. As a result, UMR will likely require many buy-side firms to make significant changes to their existing collateral management processes. So it'll be very interesting to see what does happen with the overnight reverse repurchase agreements, because these are treasury bonds. These are American treasury bonds. They're some of the safest collateral you guys can get ever, right? Treasury bonds, the odds of the United States government going bankrupt basically unexistent for a long period of time, right? So this is seen as safe collateral. We have seen the reverse repurchase agreements overall just going crazy, been over $1 trillion every single day for the past couple of weeks. The last day that we did get recorded for was Friday, and that was $1,120 billion worth. There's been some talks about they're not actually talking about this. They're talking about other reverse or repo bonds. So definitely be interesting to see how this does impact the overall overnight reverse repurchase agreement market. But just going back to that, the OTC derivatives, it's not what you guys think. It's over the counter in the sense of obviously not on the open markets. We can't see these trades, but they are for billions and billions of dollars, much bigger than any trades they're doing in the open markets. Essentially going bank to bank or hedge fund to hedge fund, whoever it is, making big agreements over the counter. And basically by doing this, by keeping a third party with the safe collateral, you're not going to really see those Archegos fallouts where one side of the transaction got completely burned out. So that is really what they're trying to do here. You're going to see margin calls of these hedge funds and institutions that do need to get this safe collateral and that are severely over leveraged. And that is straight from Bob Stewart's Executive Director of Product Management for the Institutional Trade Processing. That is straight from his mouth. So September 1st is going to be very interesting. I think a lot of hedge funds and institutions, they have an idea. Obviously, this is coming up. So they're probably going to get this straightened out coming on Monday or Tuesday. Now, this other situation, this is on September 3rd. That is on Friday. It says, NSCC has proposed to increase the minimum required fund deposit for each member from the current $10,000 to $250,000. NSCC has received regulatory approval for the proposed rule change SR NSCC 2021-005 on August 11, 2021. NSCC, this is the red box. NSCC is providing this notice to its members of the implementation of effective date September 3rd, 2021. On the morning of the effective date, members with a fund deposit below $250,000 will incur a deficit that will require funding by 10 a.m. Now, a lot of people are construed on this to say JP Morgan or Citadel, right? They probably have 20 to even 50 different accounts with the NSCC and DTCC. They're going to have to come up with basically $240,000 per account, going from $10,000 to $250,000 all at once if they don't have this already figured out. So it's not necessarily going to hurt the big guys that do have the funds required to cough up millions, tens of millions, hundreds of millions, or even billions of dollars to keep all of their accounts in order and to keep them obviously not in a deficit. It's not going to really hurt the big guys. It's going to hurt the small guys. That is really where you're going to see some capital going away from the markets. And it's possibly, if they're over leveraged on AMC, it's going to be coming from AMC stock. They're going to have to cover on their short positions to release that collateral to stay with the NSCC and DTCC to meet these margin requirements. So that is what is going to be very important. But obviously that is on Friday, so I don't expect anything too crazy coming from this on Friday. I don't think it's going to be, obviously Friday is going to be the start of a major rally. I don't necessarily think that is the case. I think Friday will probably be positive, just like we have seen Fridays are tending to be positive, whereas Thursdays are very, very negative and in the red. Fridays are green, and then Mondays are green throughout the rest of the week, basically until Thursday. So I really think next week, not this week, but next week is going to be more important for this rule change right here, or this rule change implementation, NSCC 2021-005. So that is basically all you guys need to know from this update. It's looking very bullish heading into next week. I am very, very bullish whatsoever. I'm going to buy more shares myself this upcoming week because I do expect the next 2 months, really throughout September and even October, to be very, very eventful. As we do know, we have the biggest margin call in history coming on October 1st. So let me know down below in the comment sections if you guys want another video on that. If you follow this channel, you know exactly what is happening on October 1st. So drop that like on the video, subscribe to the channel, turn on that notification bell, all of that good stuff. But that is all for this video. I will see you guys in the next one.